Another question that came in via email, and I was working on other projects, so I didn't have time to put slides together. But for Kenneth, your question that I answered via email, I also had to do something else. I had to run a test. So let me just go in a covered call here. Kenneth had asked me a question related to doing covered call positions weekly. So let's go 2 to 8 days out in time on TNA and TZA. In other words, doing just at the money or maybe slightly in the money covered call positions because the premiums look so good for both TNA and TZA. And of course, they're sort of, I almost said alternates of each other. They're not alternates. They're sort of opposites, inverses of one another. Let's take a look here. I don't know if I have it in the webinar account. I don't. Okay, no problem. So what I want to do here is I'm going to create a list. And we're just going to call it our TNA TZA. Paste the symbols in, of course. TNA TZA. And let's create. It's going to ask me to refresh the page there. There we go. Now I've cleared out all the filters, put in a weekly expiration, and Kenneth, we're going to go one strike in the money for this example. And to give a little bit better protection, of course, but also to give the good return. And we know that the at the money, closest to at the money option gives us the best time value. So that's what we're going to look for there. Okay, and let's go ahead and submit this search. This is our weekly. So the small cap bear 3 times, ultra, big ultra, 3 times bearish TZA ETF on the small cap versus TNA, which is the bullish 3 times. The bullish is at 59. I think this is the end of the 7 months. I think this is the closest the value of these two options has been. And of course, with regular market conditions being the way they are, we can understand why. But you're looking at a good returns here. Downside protection of just slightly in the money covered call on TZA and TNA of 5.9 and 5.1% respectively, and reasonable percent if assigned of about 5% as well. Now, we haven't ever done it this way before because I didn't have time to put the slides together, and the second test was just finishing, Kenneth, when I got started. So what I did is I did this exact search, but used a monthly series, Kenneth, and did it over 7 months from the end of July, the Monday following standard July expiration to today. And pause the screen real quick. I'll make sure to unpause it. And let me just do this. So this is the monthly. Okay, let me show you here. I've never seen how this shows up in a webinar this way. So just bear with me 1 second here. There it goes. Okay. Yes, you're just looking at a Word document. So what we did is we did the TNA TZA monthly covered call starting Monday after standard expiration, just once per month, and took $100,000 and put 50% into each trade, so $50,000 each trade. I know you wouldn't do that. We just wanted to use the numbers as a basic one. So for the first cycle here, this is our background tool that we use for the options testing strategy and various things. It just runs the testing for us in the background, so I don't have to sit there and do it manually for you guys. But in the first month, both did pretty good. For the August expiration 8/20, sorry about that, 3.3% return on TZA and a 9.1% return. Why is this so lower if these premiums are so good? Well, this one actually took a loss. We bought the stock at 36, sold the 36 call at 363, and the stock was at 345. So it's just a small return, didn't eat up the entire premium, but it was there. September was still pretty good, surprisingly. And we knew we had some hiccups in there, but again, 6.5% on TNA this time, but only a 1.3% on TZA. It dropped a little bit, dropped $1.50, but we collected $1.90 in premium. September to October, loss of 4.6% on TZA, gain of 8.3% on TNA. Next month, loss of 4.9 on TZA, gain of 6.7 on TNA. There's the big one. This is what you'd expect. In December, from November to December, the loss of 14.6% on TNA and a gain of 7.5% on TZA. This is kind of what I was really worried about. Let me get out. Stop that. This is what I was really worried about that we would see more frequently in this setup, Kenneth, is that because I have a capped gain, if one of them goes on an extreme run, you don't see that bigger return where you still could see up to a 14, 15, 16% loss, even with the bigger premium. It didn't play out as much as I thought, but it did here in December, and it almost evened out in January. A capped gain of 11% here on the TZA covered call, which is still phenomenal because volatility was really high, Ken, and a loss of 12.2% on the other. Now, this is only up 7% after the first 6 months, but the final month kicks in again because volatility is high. Good return of 11.8% on TZA, good return of 9% on TNA. Ends up 118,547, 18.5% return over 7 months, which really just comes out to a 2.6% return per month. That's not too bad. But is it worth the extra effort to be trading covered calls on the inverse in this scenario, doing 2 trades where you know at some point one's going to lose and one's going to win, but you're happy with that to make 2.6% per month? Are you doing as good as 2.6% per month on the regular covered calls you're doing or the trades that you're making without trying to swap the inverse? And yes, we are in uncertain markets, Kenneth, so I see where it's coming out. But keep in mind, too, 6 months into it, you were only about a 7.8% return from where you started from. You got a big month at the end because of that huge inflated volatility and some other issues, Kenneth. But 7.8% after 6 months, you're just a little bit above 1%, 1.1% per month. Is that satisfying your trading goals? If volatility goes back to normal and we see more regular movements in the market, January was a big move, so you saw that big loss, but it was countered by the relatively large gain as well. Now, let me go back to power options real quick. Will this work? Yay, great. Okay, so that worked well. And once again, I am going to pause the screen, and I got to look at something else here. Give me a second. Okay. Now, this is going to look a little bit different, and I apologize, but let me pull it over here. It might show up better. There it goes. Okay. Great. I know you're not seeing it yet. Don't worry. I'll get there in a second. Okay, great. So this one finished when we started our presentation, Kenneth. This is the weekly that we just did. I'm sorry, I just showed you the monthly. My apologies. This is the one that just finished about 5 to 10 minutes ago with the weekly series. And the weeklies doesn't seem to be getting as high as the return. And, minus 3.9 to plus 6.1 up here, that's still doing pretty good. But the end amount, week by week, one strike in the money for both TNA and TZA, with the weekly premiums now at 4%, 3%, 2% instead of 6%, 7%, 8% we saw with the monthlies, Kenneth. 12.6%, 12.7% return over 7 months. So the weeklies actually saw a lower return over time. So here's one where it gets really risky with the weeklies. That big move towards the end of January, from January 14th, January 18th to the 21st, with the markets being closed January 17th, there was a big decline that time. You took 11.4% loss on TNA and only made 3.8 on TZA. That's an imbalance there. You wiped out about 3 previous gains, or 2 or 3, I'd say 1.5 previous weeks of wins. But it happened up here too. 9.8% loss on TNA on January 7th to a 2.6% gain. Here, the premiums were lower, only 0.8 and 1.8%, but both were successful on January 31st. Gain of 4%, loss of 9%, and so on and so forth. But again, as I mentioned, ending amount about 12.7% return here for the weekly covered call on TNA, TZA, just looking one strike slightly in the money. 68% win percentage, which is higher than you'd expect. It's not going to be 50-50, even though we were starting at the money, because that premium does help you. But again, over a 7-month period, is that just less than 2%, around a 1.7, 1.8% return, I believe, Kenneth. Is that meeting your trading goals for this structure with TNA or TZA? Or looking at it, do you feel like I feel that although you're seeing a good return, don't get me wrong, 12.7% is nothing to be shy about, nothing to be unhappy about. Return is a return, right? Even over a 7-month period. But if you're doing better than that with the covered call positions you're using right now, even though you're uncertain on the market conditions, I don't know if this is really worth it to go inverse with covered calls TNA and TZA. I don't know if it's hitting the goals of what you'd expect for the profits you're looking for, Kenneth. So sorry I didn't get to put the slides together for you, but because I wanted to run the tests to verify it. And I answered your email and I said, this is what I think what will happen, but I wanted to actually run those tests, but it takes some time to do it. So we had those working in the background, Kenneth. And those were the expectations. You see, the monthly was about an average of a 2.6% yield over the last 7 months from ending of July to today. And then we saw the 12.7% return with the weeklies, which was a little bit more muted because you weren't making as much to the upside on the monthlies, but we're still seeing those large gaps down of 9, 11%, which is wiping out a week and a half, maybe 2 weeks of previous successes in those positions. Raphael had asked, is the test plan available on the platforms? Sorry, I came in late. Oh, okay. So if you're talking about the tool that we used earlier, I don't know what time you came in, Raphael, but we're talking about the tools we used earlier to show the TNA, TZA covered call example for Kenneth. No, that's not available in the trial, okay? Of course, you can take a 14-day free trial at any time. I'm currently on my 14-day free trial, Raphael, and what we offer on the 14-day free trial is 3 months of back testing. So if I go to covered call and I go to back test, I go Smart History Excel, I'm going to go back to December. Furthest date back is December 20th. Okay, so it's really about, I'm sorry, it's 2 months really. All December 20th through January 20th through February 20th. So it's about 2 months. And, oh, I didn't save it, did I? Okay, so let's just take May 25th search. I don't even know what this was. So I'm going to run a search on December 20th for what would have matched my criteria, Raphael, on this May 25th search that we created back on a webinar on May 25th. Let's see. Now, I'm sorry, the back test takes a long time to use because right now we are updating all of the historical data from today. So I'm interacting with a table that's getting a bulk upload into it in brute force format. So it takes a while to run some of these. Okay, there you go. All right, so these two positions, QDEL, and then of course we can calculate group results to see what the returns would be. While it's calculating the group results from that search, Raphael, the tool that I was showing you, we use in the background, it's part of an additional service, one-off service really. Let's go to the store and strategy testing and optimization. So what we do here, what that tool allows us to do is we can test a year very quickly without doing it manually, or 2 years in some strategies. Now, the strategy testing service, what this is, it's a $50 one-time fee. And essentially what you do is you tell us what strategies that you want to use. The list of strategies that we have available in that tool are right here as well. And you can save your search and power options, or we can create it for you based on what criteria you'd want. And then we can set a listing of alerts for you. I didn't use any stops, by the way, on Kenneth's test with TNA or TZA. We just wanted to flow with it. And so we did. We let that go. But yes, create a search with your criteria that you want, and we'll help you set it up, and we'll save it on your account, or we can save it on our account. Tell us what triggers you'd want to maybe close the position or exit the position. Strategies are covered calls, naked puts, bear call, bull put, buying calls, buying puts, and long stock positions. Okay, and what we do here is each report is $50. We'll go for 2 to 3 years, maybe perhaps, and run the search there, show your results, profit and loss for each trade, and more. Now, Ernie went up. I'm sorry, I clicked out of that. The search strategy optimization is $500. It's a little bit more intense. What this does here is same thing as before, but what Ernie promises is that he's going to test and improve and optimize your strategy by adjusting criteria, adjusting exits. He's going to toggle all the different numbers for you and run the search again, and then toggle more numbers and exits and run the search again. It's time consuming for him, but he guarantees an improvement of at least 20% of your first initial run, or your optimization fee will be refunded. So if you have an idea that you think would work for covered calls and you want to do that, and Ernie runs a test and it doesn't look as well as you did, if you take the search strategy optimization price, if he can't get it up to at least 20% higher than what your initial test was, then that'll do it in that case. So yes, users don't have access to that tool. I'm sorry. It's what we use to quickly get our results for questions that come in on the webinar, for the strategy testing here that's done as well. and much more. And of course, that's disastrous. Yeah, 16.8% loss on QDEL and 1.6%. Oof, not a good search that we created there. I wonder what that search was, actually. I'm going to go ahead and go back there and take a look here at that covered call search. May 25th. That's just one run, but just curious as to what we were looking for. 0.5% if unchanged, 1% in the money, bid price 20, 65% if assigned, stock price greater than 10. In an uptrend, positive MACD, just a weekly search with a 0.5% unchanged with a 65% probability. Oh, we were looking for high percent current option volume. That's why. Okay, that would explain it. So that percent current option volume, of course, that's looking for positions that are showing an increase in option volume today, which usually means there's news coming out. And it looks like in that case, from the December 20th screen, the QDEL and Acadia was probably on bad news. More puts were being bought. So the covered calls losses, both stocks fell in price. Okay. Kenneth, yes. That is correct, Kenneth. I did. Kenneth asked a question. He said, going back to our, and I'll try to crop this and put it in with yours, Kenneth. Let me go back to that if I can. Kenneth's question was, when you ran the TNA TZA test, did you reinvest the premiums from the covered call? The answer is yes. System doesn't know the difference. Okay, what do I mean by that? We're telling it to start with $100,000 and allocate 50% to each trade. So on the first cycle on January 23rd, January 19th to July 19th, July 23rd, Kenneth, the account actually dropped. 6.2% loss on TZA, 3.8% win on TNA. And it was down at 98,718. And then the system allocated what it had left to the two positions. So, roughly 47,000, 48,000, 49,000, was in TZA and TNA. Let's go down here. So the premiums taken in, new account values 101,062, 101,062 to two potential positions. Okay. In that case. Then at 102, reinvested the 102. So there you go, Kenneth.